Hey, welcome everybody. Welcome back to another coffee chat. It is Thursday and we're excited. I have a great show for you today. I have, this is coffee chat. So we just have talks. Listen, there's nothing formal about this, Steve. I know it's your first time on the show, but nothing formal about this. We just want to put out great content to the community. And we're so thankful to have you here. Steve White's here, everybody, founder of American Credit Repair, here on Coffee Chat. So we've had a lot of people asking about credit. How can I get my credit together? And so I thought, hey, I've worked with this great company with some of my clients. They've gone through them. So why not bring on Mr. Steve White of American Credit Repair? Steve, take 2 minutes while I share the broadcast to tell people who you are and what you do.
Great. Thank you. Thank you for having me, Sue. I really appreciate you having me on. American Credit. Well, I started the company 21 years ago. And prior to American Credit, I was a finance manager at a Cadillac dealership, believe it or not. And a friend of mine was in credit repair at the time, and I had never even heard of it, to be honest with you. And we had clients that would want to take advantage of the 0% financing that Cadillac would offer from time to time. And you had to have a 720 score or higher back then. And these clients would have like 680, 690 scores, so they couldn't get the 0% financing they wanted. And to them, it was a deal breaker. They had to either get it or they didn't want to buy the vehicle. And, at the time, my friend had told me, oh, yeah, if you have people that need help with their credit, just send them over to me. My company fixes it. I didn't quite know what he meant at the time, but I remember telling these clients, hey, my friend does work on credit repair and he said he can help. Give him a call and let me know how it works out. And I forgot about them. And then 3-4 months later, these clients came back to me, hey, we want to try again for the financing. We see they're running that promo again. And so I re-pulled their credit and scores had jumped. One of them from like 680s to 760.
Wow.
Another one had jumped like 730s. And I was kind of shocked by it because it was so quick, 3-4 months later, their jump had been significant. And so it piqued my interest enough to where I looked into, what is this? What is this about? Like, how does credit repair work? What is all this? And that's when my eyes were open to the fact that you can actually remove negative items off of a credit report rather than waiting 7 to 10 years for the stuff to drop off on its own. You could actually remove these things early. And so my thought process back then was I'll just open American Credit on the side and refer clients to myself. That was my original intention. And I hired one friend of mine to start, to make phone calls and to receive calls and to sort of reach out to mortgage offices back then. And he ended up getting so busy from the lenders in town, just in the small town of Redding, California. This is in Northern California, small town of about 80,000 people, 90,000 people. So it wasn't very big. And he got to the point where he was so busy with the lenders that were sending clients over to him that I had to leave the job as a finance manager and go work full time at American Credit. It became not so much of a hobby or a side hustle that I thought I was starting. And it just became a full-time thing. And now here I am 21 years later.
Wow. Talk about longevity in a business. That is unbelievable. And to be honest with you, as long as we're still using using credit scores to determine finance, you don't have to worry about going anywhere. Your business is always going to be here.
Right. That's one thing I've learned is it is in a sense recession proof, although during the pandemic, we did see the same kind of dip that the mortgage offices saw, mainly because we follow the mortgage industry. So when the mortgage industry is down, then we're down. I would say 90% of our leads come from lenders and realtors. So we do still feel the same, waves and ebbs and flows of the industry that you guys feel in the mortgage world. But yeah, for the most part, we are pretty recession proof because credit's always going to be needed. And, whether it be for purchasing a home, buying a car, and nowadays, even for your employment.
Yes.
I have a lot of lenders that are coming to me now and realtors that it's required to have a certain credit score or a certain level of credit just to renew their license. And so we're getting a lot of lenders and realtors just for that reason. But nurses, there's a lot of different industries, firefighters, law enforcement, they now look at the credit report as an indicator of whether or not they want to hire that person. And so it's more than just buying things nowadays.
That is so very true. I remember when I worked at the Bureau of Prisons, they did background checks and credit checks, and I became employed with them back in 2004. And that was the first time I had ever heard of that. And I was like, wow. So, and I understand they don't want you to be, compromised in any way by the inmates. So if you're having financial instability, It's a good chance you could be compromised.
True. Yeah, it's a
Right.
reflection. They say it's a reflection of you and your work ethics or your personal.
Mhm.
Well, I don't completely agree with that. I feel that
Right.
things, bad things happen to good people, and there's times where people will go through a divorce, and one party of the divorce doesn't honor the decree, which I see a lot, out of spite just for the other party, and they damage the person's credit because the divorce decree says you got to pay for the house, you got to pay for the car, and one of them doesn't hold up that end of the deal. I'm working on that one right now for a client.
Wow. And then
Yeah.
all of that, people lose their jobs, people get sick. So it's a lot of things that could cause your credit to go awry. But we're going to
Exactly.
get into that. We have some segments we're going to cover: credit repair and improvement strategies, dealing with negative items, building and maintaining good credit. And then we're going to get some industry insights and expert advice. And one of the things I love about American Credit, and we'll cover it in the last segment, is you guys have a money back guarantee. But
Mhm.
let's get into some of the questions I want to ask you. First of all, let me thank you for your service, because you are an Army veteran. Thank you very
Thank you
much.
too for yours. Thank you.
Thank you, thank you, thank you, thank you. What do you think are the biggest misconceptions people have about credit scores?
I think the biggest misconception people have about credit scores is they'll see their credit score on Credit Karma or online, and they'll see that they have a high score there, and they'll assume, oh, I'm qualified. I can go buy a house or I can go buy a car. And then they find out the reality once they get there, that maybe their scores aren't exactly what they thought. And so you'll look at your credit scores in one area, like if you go to a car lot today, you'll see a set of scores, and then you'll go online and you'll see a different set of scores. And then if you went to a mortgage office, you'll see a completely different set there. And people don't understand that it's not that one place you're going is looking at different information. They're all looking at the same information on your credit. You have one credit history, and that's where they're pulling that data. The difference in scores that you see is they're all using a different scoring model. So when they look at your credit at a car lot, they're looking more closely at your automobile history, for example, and not so closely at your mortgage history or your credit cards. Whereas at a mortgage office, they're looking at your mortgage history. Have you paid your mortgages on time? Do you have any
Mhm.
mortgage lates? And so your score is going to vary depending on that industry you're looking to purchase from. And so people's misconception would be, my scores are here at this level. Why aren't they this level over here? And so the answer to that is just there's a lot of different scoring models. And the best way to describe it to the clients, I tell them, is think of it like a lens on a camera. You could be taking a photo of a scenic background and just use the natural lens, and you're going to get an image that looks similar to what you see. But if you put a gray filter on there, all you're going to see is the black and white of that image, but it's the same image. You see what I mean? So you're
Yeah,
looking at
yeah.
that data with a different lens. What it really boils down to is it's just a different algorithm. And each one of these places you will have your credit pulled is using a different algorithm to determine what your score is based on what they see on your credit report. So you have one credit history. It's not different at every place you go. It's just a different way of looking at that same data.
Yeah, which is really crazy, because I get that in the lending industry. People are like,
Mhm.
well, Credit Karma says my score is this. I was like, first of all, let's not use Credit Karma when you're trying to buy a house. We go by mortgage scores. The only thing that's going to get close to what we're looking at is myfico.com.
Yeah, it's true. My FICO. And on
Yeah.
that note, real quick about Credit Karma, what I advise the clients to do, I always tell the clients, look, I can't tell you what to do. I would tell you what I would do. And my personal take on Credit Karma is people should look for a different source that's a little more reliable, for one. And if they don't know this, Credit Karma makes their money by selling your data to third parties. So even though they're not going to tell you this, there's that whole saying, nothing in life is free. Well,
Hmm.
Credit Karma is a perfect example of that. They're not charging you anything so much, the consumer that has the account, but they're using your data to sell to third parties and making money off you on the back end. And so the higher
Wow.
your credit score is, the more of those junk emails you're going to get, the more robocalls you're
Mm.
going to get, because they're selling that info. And someone with the higher score is going to be more likely to sell a product to, so they're going to buy that data more often than someone that's in the 500s. So Credit
Wow.
Karma is not a good resource for your credit when it comes to accessing your credit or monitoring it. There's other ways to
Wow.
get copies of your credit where they don't sell your data, and there's also places you can monitor your credit to for a small fee, and they won't sell you.
And I always say it's worth it. I always tell people it's worth you paying $30,
Hmm.
$40 to pull your credit, to monitor your credit on a
Hmm.
monthly basis, because you spend that in eating out. And
Yeah.
listen, you need to know what's going on with your credit. So what are some factors that impact the credit score the most?
Factors that impact the score the most. There's two major factors that impact the score. One of them is your credit card usage, your balance to limit ratios on your credit cards. That's about 35% of your score. And the other 35% is how old are your accounts? Like, what's the longest account you have on your credit report, open accounts? And so to break that down, the biggest factor of the balance to limit ratio side is what are your credit card balances in relation to their limits? Are your balances maxed? Are they close to the max, or are they paid down to the to the paid off or close to off? Anytime you go over 30% of your limit on your credit cards, your scores start to take a hit. Think of it like a sliding scale. So if you
Mhm.
hit 30%, it's going to go down a little bit. The closer you get to the max, the lower it's going to go. That score can range as much as 60 to 80 points just based on your balance to limit ratios. It can be that big of a swing. And the other side of it is the older the accounts are, the better. I had a client that had a 14-point drop in her score while she was in escrow, and the lender called me freaking out, like, "What's going on? What happened? What did she do?" And he couldn't figure it out, and it took me an hour to catch it. What she did was she closed she had two Capital One accounts, one with a $5,000 limit she had opened like 3 months ago, and the other one was a $500 limit card that was opened 10 years ago.
Ooh.
And the notation that he missed that I finally caught said closed by consumer on the $500 one. And so I called her and asked her, I said, "What happened? Did you close this card or did they close it on you?" And she goes, "I closed it." I go, "Why'd you close it? I'm just curious." She goes, "Oh, it was my old, it was a $500 card I got at the department store when I bought my kids some clothes. I just, took advantage of the 10% off at the register and didn't really use the card much. And then they recently gave me a $5,000 card. So I figured getting rid of the $500 card would be beneficial because I didn't really use it." I said, "Oh, I wish you'd called me. You should have called up Capital One and asked them to raise the limit on that $5,000 card. They
Mhm.
would have easily raised it to 5 grand, maybe 10. And then you could have canceled the recent card if you really wanted to get rid of one of them, or just kept them both." And she was like, "Oh no, I didn't know." Well, she closed her oldest account, the 10-year-old account. And her next oldest one was like 4 years old. So it dropped her score 14 points as a result. And there was nothing she could do. You can't reopen those accounts once they're closed. So never close an old account. Remember that, and tell your clients or your guests to always remember that. Like, it doesn't matter if it's an insignificant card from Banana Republic or Macy's or anything that's just something you're not using very often. Keeping the oldest account open is very important. So you can always ask for limit increases, but don't close those accounts. So if you ever need a higher
Wow.
limit, don't apply for a new card. Just ask them to raise the limit on the one you have.
That's some good stuff right there. So
Mhm.
I learned that a long time ago. Yeah, you always want to keep your accounts open
Mhm.
because of the age. It helps you on the credit report. But you said something that a lot of people probably didn't know is that, from time to time, I think it's good for you to call your creditors and ask, "Hey, increase my account. If I'm paying
Mhm.
timely, I'm never, and I'm using this card, then hey, why not give me a credit increase, which really boosts your credit?" And you
Yeah.
said something else that was, I'm just reiterating because I want these listeners to hear this, whether they're
Mhm.
live today or they're catching it on the
Yeah.
replay. It's very important to understand one of the quickest ways to raise your credit reports is to pay down your credit card balances.
Pay them down. Yep. Try to, and the best way to pay credit card balances down, and let's say you have 5 or 10 cards, right? And they're all over 30%. Maybe one of them's maxed, one of them's at 50, one's at 35. Or you might have a couple that have a small balance on them that you might think, "Oh, I'm going to pay those smaller balance ones off first and then get to the larger balance ones later." The credit bureau's algorithm looks at each individual card's balance limit ratio when it calculates your score. So if you wait until you pay off the very large one till last, your score is not going to jump much until you pay that one down. For example, I had a client with 4 credit cards on his credit. 3 of them were paid off. He had $10,000 limits on all 4, and one of them had a $9,800 balance on it. And I asked him, I said, "What did you do? Did you transfer all your balances to that one card to get a 0% transfer rate?" He goes, "Yeah, I did that because they gave me 6 months, no interest." I go, "Oh, I see that. I would have done that too if I had not known what I know now about credit." Um, but that one, he needed, I think it was like 20 points, and he was hesitant to pay down 7,500 because he didn't want to put out a big chunk of his closing costs to get that card down. I said, what I would do, and this is just because nobody taught him this, I would transfer 7,500 of that off to the other 3 cards. Do a cash advance and transfer it. Maybe you'll pay a little bit higher rate, but doing that will get all 4 cards under 30%, and that should boost your scores. And he did that, and it
Hmm.
got him 27 points, and he didn't have to put a dollar out of his pocket, even though he paid a little higher rate for a moment while he closed his loan. and it saved him the money he would have put out of his pocket to put that card back down to 30%. But because that one card was over 30, it was suppressing his overall scores, even though he had 40,000 available and only 9,800 being used. He was still not at 25% truly because that one card was maxed. The Bureau's algorithm assesses risk. So that's all it really is. It's just a risk assessment. And when it looks at one card that's maxed, it doesn't see, oh, this guy's trying to save interest, save money on interest. It sees him as a risk. And so
wow, that's crazy.
Yeah. So each card's individual balance limit ratio affects your score. It doesn't look at the collective.
That's crazy. So that's a good tip. So we're all getting this tip here for free. So if you guys are just tuning in, you're here with Coffee Chat, myself, Sue Ham, mortgage broker with loanswithsueham.com, powered by Edge Home Finance. And I'm speaking to the amazing Army veteran, president of the American Credit Repair Company, been doing this 21 years, Mr. Steve White. And he's come on to the show this morning just to have a chat with us about credit. And so far, he's already been dropping nuggets. So share this broadcast. Yes. So I want to go into, and you pretty much you just explained how credit utilization pretty much affects your scores and how you can manage it. And the fastest way to boost the credit scores is to pay down those balances. Would you agree?
Yep. And when you pay them down sorry to interrupt, when you pay them down, like I was saying, if the best way to pay them down is to bring them down at the same pace. So what I would recommend clients do, let's say you have 4 or 5 credit cards, write down on a piece of paper or use a Word document, the name of the company, what your limit is, what your balance is, and then calculate your balance to limit ratio by dividing the balance by the limit. So if you have a $3,000 balance and a $10,000 limit, dividing 3,000 by 10,000 is 30%, and then write that down. And do that for each card. Then you can see real easily on one piece of paper, where are my high balances at? And focus on getting the high ones down to the next level. So let's say one card is at 70%, one's at 95, and that's your highest. And then you have a couple more that are down around 40. Pay the 95 one down to 70. Once you get them to 70, look at the next tier down. Maybe the next one's at 60. Pay those down to 60 and bring them down equally like that, rather than pay one off at a time, like I was saying.
Wow. You just gave us the game plan for free. We appreciate that.
Yeah.
You guys, guys, you're getting this on Coffee Chat. Listen, so how can someone remove negative items like collections or late payments from their credit report? That is probably, I don't know, you tell me, but that's one of the biggest things that I get asked. I don't know if that's the biggest thing that you get asked from, a credit repair company.
Oh yeah, that's the number one thing we get. How we remove things, well, how you can remove things off your credit, there's 3 ways to do it. You can wait 7 to 10 years. Obviously, that's one way. It's not really the quickest way. But if you wait, these things should drop off your credit. How negative items stay on your credit is from the date of last activity. So if I missed a late payment on my car loan last month in February of 2032, that late payment will stay on my credit for 7 years. So for 2025, February, 7 years. February of 2032. That's how long it'll stay on my credit.
So let me ask you this. Will a late payment impact your score for that whole entire 7 years? Even if you've been paying it on time?
Even if you pay it on time. Okay, so that's a great question. I get that a lot. If you have perfect credit, your scores may be, let's say, 750 to use a round number. If you have a late payment hit your credit, whether it's a $10 minimum payment on a credit card or a car loan late, mortgage late, it'll damage your score as much as 100, if not more points, right? So you might go down 100, 120 points initially. But if you're making all your payments on time after that happens, over time, your score will creep back up. So let's say 3 months from now, 5 months from now, it may be only doing 50, 60 points of damage, not 100. And then a year from now, that same late might be doing 30 points of damage. So over time, there's a diminishing effect to the damage it does. And as long as you're making your payments on time, obviously, if you add a new late payment somewhere in there, it's going to do, more damage. But just for that one late, what you were asking is how long does it do damage? It'll always do some damage. So it's never going to be damage free if it's sitting on your credit. It just doesn't do as much damage over time as long as everything else is being done right. So if you're paying your balances, keeping your balances low, and you're not missing any future payments, that one late payment is going to be doing a lot less damage in the future. As a lender, certain late payments, regardless of what your score is going to disqualify you for the loan or DQ you for a better tier, like a mortgage late, for example. I think lenders, you probably know better than I do, Sue. I think it's 12 months now.
12 months.
Yeah, 12 months. So even though your scores might be 750, because of one late payment, it may not be doing that much damage in a year or 11 months, for example. That one late payment could still be costing you the loan or at least a higher rate, 1% higher rate for sure.
Oh yeah, definitely.
Yeah.
And some people who are in a tight situation, they're saying, okay, I understand it may cost me a point or maybe even 2 points sometimes, or I'm going to have to bring a whole lot more money to closing costs.
Right.
They're willing to do that.
Right.
And make payments for 6 to 12 months and then refi if the credit gets better, or they're willing to do that and get into your program to improve the credit so that once they've made 6 on-time payments or 12 on-time payments, they can qualify for a better rate. But
I tell lenders that too. If you or any lender has a client that right now in the last 2-3 years you've signed them at what 7% or higher, those even if they had credit that qualified, but they maybe had a few blemishes on their credit, those would be a good referral to send to us after you close, because then we could start to work on their credit and boost their scores now with time, because we have 5-6 months of work. Then when the rates drop, they're going to be the first ones in line to want to refi because they took the higher rate. So those would be clients that would be a good fit for us after they close a loan and just had to take the higher rate because that was what was available.
So lenders, if you're watching, that was a tip right there. That's another way to, help your clients, but also to give you a chance.
Second level of business from that refi market when it comes back. I heard rates are dropping again. Is that true?
Yes, they are. They are dropping. And I think it was Redfin who said that we are officially in a buyer's market because buyers have more of the power now because houses are sitting longer. Of course, that's not in every market.
Right.
And owners are having to reduce their prices. I know I had to reduce the price on 2 of the houses that I'm selling, so I certainly feel it. But yes, prices are dropping. So now is a great time to buy. How do we get 30 days late off of our credit?
Oh, yeah. Anything on your credit can be deleted. So back to the 3 ways to delete things. So first one is waiting 7 to 10 years. The next step up from that is using a dispute letter approach. I don't recommend this approach. This isn't what we do, but this is one way to do it. A dispute letter, most of your, maybe your listeners have heard of disputing or dispute letters. You can do it through Credit Karma, for example. You can do it through the bureaus directly. I don't recommend you hire a dispute letter writing firm or do these on your own because it's an old approach. It's been around for 40 years. It's an antiquated approach, and it's a one-sided approach. Why I say that is because when you're writing a letter to the credit bureaus or doing an online dispute, all you're doing is dealing directly with the bureaus, and you're hoping the creditor doesn't verify that account. So, for example, if you have a late payment, like you mentioned, most clients think, oh, I just write a letter. Well, you write a letter to the credit bureaus, and what you're saying to the bureaus is something like, oh, I don't think this is mine, or I moved, I didn't get the bill. Whatever you say, you're hoping that creditor doesn't respond back to the bureaus and verify that you really did have a late payment. Well, since it's been around for 40 years now, the dispute letter approach, most of these creditors, most of the big banks, they've all been inundated with these letters over the last 40 years. So they've built departments to help respond back to these. So more often than not, they're going to verify that the account information is yours and that, that the late payment or whatever happened really belongs to you. When that happens, you're stuck with that item on your credit. What we do, and the third way you can fix your credit, is you can hire a consumer law attorney and pay a bunch of money. They're $5,000 to $10,000 per person to do the work. Yeah. And if you've ever hired an attorney, Sue, they're going to say to you, you know what, Sue, I'm going to do my best to go in there and win your case. But if I lose, I'm not the judge. You still got to pay me. That's how attorneys work, and they don't give you any guarantees. So when I learned about this approach 21 years ago, I heard about it. 19 years ago, we adopted it. I learned this from a debt settlement attorney who actually referred.
Wait a minute. You about to give us the good on Coffee Chat for free?
Oh yeah.
How to remove 30-day late payments.
Yeah, how you get 30-day lates off. Well, what we do is we use the same approach as a consumer law attorney without charging the exorbitant fees they charge, and we give guarantees. So the way that a consumer law attorney approach works in comparison with a dispute is, with a dispute, you're just writing a letter to the credit bureaus, right? So that's the one side I told you about. With the consumer law attorney approach, the approach we use, we go to each creditor first, and we're threatening them with a lawsuit. What we do is we send a 90-page packet to each creditor, approximately 90 pages. In that packet is a copy of the law, the Fair Credit Reporting Act. We send a screenshot of the portion of the law that tells the creditors what they have to pay the client for damages. These damages are different than misreporting the account information. So there's 2 things going on. The mistakes I talk about are called FCRA violations. Your guests can Google that. Just Google FCRA violations, and you'll see that the creditors are responsible for paying a fine for every mistake they report on the account. And what I mean by that is when you look at a tri-merge mortgage account, you're not going to see these mistakes. But if you pull a soft pull through Identity IQ or Smart Credit, my FICO's a little bit rough, not as clear, but the two I mentioned, Identity IQ or Smart Credit, they give you a detailed reporting of how the creditor's reporting the information to each bureau. So Equifax, TransUnion, Experian. And anytime the information doesn't match exactly between the bureaus, let's say the date that you open the account is slightly different or the balance owed might be off a little bit, that triggers a fine they have to pay. And it's between $500 and $5,000 per mistake. So we send this packet to the creditor and we're saying to the creditor, look, I know what my rights are. Here's a copy of the law for proof. It says here you reported me late on my mortgage back in May of 2022. Prove I had an account with you. Prove I was late. More importantly, prove you followed this law and protected my rights, or I can sue you. By the way, here's some mistakes I see that you've reported. Prove these aren't mistakes. And we highlight the account. We screenshot the account and we highlight all these little FCRA violations I mentioned. And an average account has between 5 and 10 of these mistakes, just so you know.
Wow.
And I can actually, if I can, I should email you some of these to show them. I don't know if I can share my screen here, but these little mistakes, usually between 5 and 10 of them, are so simple that the client would overlook it or not see it without a trained eye. But if you look at your credit report and you're seeing the 3 accounts separated by like I said on that soft pull report, look for any variances in the dates or the balances or the date of last activity. And an average account has between 5 and 10 of those mistakes. So what we're doing when we write that letter to the creditors, we're showing the creditor the client is savvy, knows their rights, and that they know they're entitled to damages and how much. That shows the creditor this is a savvy client, not just your average client writing a letter saying they moved or their dog ate their bill. What we do next is we go to the bureaus and we ask them to investigate that account, which starts the 45-day timer. So like a dispute, we have to open that investigation with the bureaus. We're basically getting the creditor and the bureaus to communicate. The creditor doesn't want to deal with a client that's threatening them with a lawsuit. So a lot of times they'll ignore the request that comes in from the bureaus. And ignoring that request causes the bureaus to have to delete that account. So we'll get something deleted like a bankruptcy through this approach, or a mortgage late, or a foreclosure, or repo. Major stuff will get deleted because the creditor sees the client differently when you threaten them with that lawsuit. If that makes sense.
Wow.
Yeah,
That makes a whole lot of sense. And the fact that there are fines that will be imposed for the incorrect
for the little
material.
mistakes. And even your positive account activity, when you look at a credit report, I'll send you one, or you and I can jump on a call and go through one of these credit reports one of these days, and I'll show you these little mistakes. You'd be blown away how many there are on positive accounts. And the reason that is because the Fair Credit Reporting Act was passed in 1970. When they passed that law, the original intention was to make it harder for the creditors to put stuff on our credit because people were having things pop up that weren't there, so they didn't know how to get them off. And the other reason was to give us a chance or a recourse to remove mistakes off of our credit. And the original plan was, rather than create another 3-letter agency like the NSA or something like that to monitor all the sharing of information, they decided to put it off on us and make it our responsibility to fix any mistakes we see. So fast forward time 50 years, there's been no accountability. The creditors have been reporting mistakes for 50 years and really not very much accountability because no one's going through your credit report or mine looking for these mistakes and then holding them accountable. And nobody looks at their credit and sees these little mistakes like I do, because you don't really catch them. You would just think, oh, it's a little glitch, the date's wrong a little bit, or the balance is slightly off, and that's why the issue is compounded to where it is today. I describe it to clients, think of it like building a house. You know how the construction loan process works? You, the client, get a loan to build your house, and then the bank doesn't just hand your contractor the whole amount of the loan. They're going to parse it out to them in phases, right? They'll say, here's 50,000, go build the foundation. And then once that's done, they send an inspector in. They inspect the plans to make sure it matches. They inspect the job to make sure it's up to code. And then they'll sign off, and then the next round of funding goes out. Well, imagine if the contractor could just call the bank and say, hey, I just finished the foundation. I checked, it's good to go. Send the next round of funding, and the bank just took their word for it. That's literally what's happening with credit reporting. The creditors report the information, the bureaus just accept it, assuming the creditor's following the law, but they're not stopping them and saying, hey, prove that you did this one correctly. They just assume it's being reported correctly, and no one's checking it. No one's going through your credit report looking for these little mistakes. But
Wow.
positive accounts have them just as many as negative accounts.
Wow, that's amazing. That's the first time I've ever heard that.
Yeah.
And that woo. So tell me then, let's go to building and maintaining good credit. That's some good
Mhm.
stuff, guys. Make
Mhm.
sure you guys send this podcast this morning out to everyone you know who could be having some not just credit challenges, like you said, even on a good credit report, there
Yeah.
are still mistakes, and you could potentially benefit from that financially if they don't correct it.
Yeah, I do credit report analysis all the time for clients that just want advice. So people that have
Mhm.
perfect credit out there, if you're in that 720, 740 range score, and you want to know how to get to 800, jump on a call with me, have me do a free credit analysis for you. I'll look at the credit report with you and give you tips on how to use your credit to game the system to get your scores up over 800, because a lot of people just don't know what to do or how to use their credit properly to get those scores up.
So have you seen a perfect credit score? Have you
The
dealt with
highest I've
anyone?
ever seen is 837. We had raised a client from 719 to 837. The
Wow.
highest you can get is 850. So that's the closest I've seen. I talked to a lady yesterday, said she's an 840. I'm waiting to see that report. I hope it'll be my first time seeing a higher one.
How did you get a 737 to what'd you say? You got
719 to 837. We
yeah.
deleted. They had a few things on there, and then I taught them usage tips combined with getting the two things. I don't remember what it was now. It's been probably 8 years since I saw that. But they had a couple things on their credit blemish wise, and so we removed those, restored their credit back to perfect, and then the tips I gave them on usage, they used them while we were working on it. So by the end result was their score jumped to 837, which is a huge jump. Yeah, way higher than we expected. We projected like 770, 780, and they went all the way to 837.
Wow. That's
Mhm.
it's always good when you can deliver more than you promised.
Yeah, we try to do that every time. Doesn't always happen, but we try.
And when things don't work out, you guys do something
We
special, and
do.
we'll get into that in the last segment.
Yeah.
Oh my goodness, it's 8:01. I told you 30 minutes of your time, but can I
Oh, no,
have
you
just
can have as much as you want. I'm all yours.
thank you, thank you, thank you, thank you. What's your advice for someone starting from scratch with no credit history?
Someone starting from scratch, it depends on, where they're at in the credit world. If they don't have any credit history at all, they're just a ghost. I would seek any family member that's willing to add them to a card as an authorized user, maybe 2 or 3 of those if they can get them. Go get a secured Visa card to start if you don't want to try to get a regular Visa because you might not qualify for a regular Visa yet. Adding yourself to an authorized user on someone else's account transfers that entire history. So if you have a family member, parent, significant other that's willing to add you, adding someone to an account as an authorized user doesn't immediately put you at risk. You can control whether or not that person gets a copy of the credit card that they can use, or if they
Mhm.
just have the account information transferred. I did it for my daughter right out of high school, so I knew she would get a boost. And so I added her to 2 of my credit cards, but I didn't give her a card or give her account access. Those 2 accounts showed up on her credit report, and then she was able to buy a car in her name afterwards. So it was a little bit of a boost she needed to get her first car, and then from there she's on her way. So starting out with either a couple authorized user accounts or a couple secured cards. I'll send you a link to the company we recommend for secured cards if you want a good referral there. And I
Yeah.
was going to tell you earlier, we also have a company that we pull credit with, Identity IQ, that gives us a discounted link I'm happy to share with your clients. That's only a $19 fee to get the report versus their normal rate, which is like 35. They try to
Oh.
give companies like mine a kickback, which I chose to just give to the client as a discount. So rather than take a referral fee from these people, I just chose to give the client a lower rate.
Oh wow,
So
that's
those are links you
amazing.
can share. Yeah.
That's amazing. And we have a question. Letitia Gregnay
Mhm.
says, "How can I schedule a consultation with American Credit?"
Yeah, you can call 1-800-791-6365, or just shoot me an email, steve@americancredit.com, and I'll make sure we get you on our calendar.
Awesome sauce. So if I that's how we can build credit if we don't have credit. But what can I do? Let me see. My question was for somebody with bad credit. Let me see. I lost my question, Steve. How can someone with bad credit rebuild their score effectively? And I guess probably some of the same things you can do if you don't have credit.
Yeah, I always do a free analysis for everybody, and then from there, it's depending on each case because there's certain cases that may not be a good fit for us, which is rare, but there are some. A client that's not a good fit for us is someone that's still in a tailspin financially. They haven't been able to catch up on certain accounts, like the car loan is behind, and they're not able to catch up on that yet, but they haven't lost the car. So they're in that limbo phase where they're still struggling to catch up. I wouldn't want to try to fix that client's credit, because let's say we delete all the late payments and next month's payment's going to be missed. All the lates we removed are going to come back. So it's not going to be the right time for that client. So that's a good example of someone that's not a good fit for us. But once you've had something happen to your credit and you're ready to take action on it and rebuild and start getting it back on track, as long as you're past whatever happened. So if you got, lost your job due to an illness and now you're back on track, you're working again, the collateral damage from that is what we want to go after fixing now that you're caught up. So, very small number of our clients don't qualify for the help as long as they're ready to take action. But once we isolate the damage, we know what to do to go after it. So we'll do a free analysis for everybody, and then we'll go through their credit report top to bottom and see what we feel we can do to help and what recommendations the client should follow on their end to get their scores to go even higher. So combined with the work we do and the recommendations, as long as the clients follow those, we average about 100-point increase in their scores. That's average. Some go higher, some go lower, but the number one thing I can tell every client is the recommendations are the key to success. No matter how good the credit repair company is you hire, if you don't follow the basic recommendations, it's not going to work. You can't miss payments after you enroll. You can't max out your credit cards after you enroll or go over the limits. Those are the things that can't happen. Or new collections showing up. You can't ignore those calls, because a new collection could be coming that they're calling you about, and ignoring those calls could lead to a new collection showing up while we're deleting the stuff that's already on there. You don't want anything new to pop up. If that happens, we average about 100 points for the clients that follow the recentations.
And how long does it take to actually see credit improvement?
Good question. Every time, we do 4 rounds of investigations into each negative item. So if a client has 10 items, for example, that we're trying to remove, we're going to launch an investigation into those 10 items, which means we're going to go through those 10 accounts, threaten the creditor with a lawsuit, send them that copy of the account information, the screenshots and all that. Then we go to the bureaus and start the 45-day timer by opening the investigation. That 45-day process, it's required by law. So the creditor gets 45 days to respond. And the reason that these items are getting deleted most of the time is because they don't respond. So there's a 45-day time period that the creditor gets to wait. So I tell clients in the beginning, probably 45, 50 days, depending on how quickly we can get all your paperwork submitted, for the first round of investigations to come in, which is when you start seeing your scores jump. But you will see your scores jump a little bit if you take action on the recommendations early. Clients may have a high balance on their credit cards that they can actually pay down, depending on each credit card's reporting date. So how quickly they report, they may end up paying a balance down today, and 7 days later, they hit that reporting date. Now they're updating the new balance to the bureaus in 7 days. So you might see a score jump quickly in a week or two, but it's usually about 45, 50 days to start seeing the significant jump. And each round of investigation gets more and more stuff deleted, so the score goes up, in stages like that.
And that's really fast.
Yeah, I would say, I'm not going to say it's an overnight thing. A client with 10, 11 negative items, maybe starting out in the 580 range, it's going to take us 5-6 months to get them to 650, 660 range. It's not quick. I like to tell clients, plan for it to take time and make sure you don't have anything new pop up. As long as you're committed and you just stick to the plan, it's really not that difficult. 6, 7, 8 months of your life versus how many years of that time it took for that stuff to accumulate.
Wow. What you've said, to be honest, most people can probably, if they would sit down, do it themselves. But the truth is, many won't.
Yeah. It's like doing my taxes. I could probably figure it out too, but I'm not gonna lie. I'm not gonna try to figure that out.
Exactly. So how often should people check their credit report? Because that's something they should be doing.
That's a great question. I recommend clients come to us once a year. If your credit's perfect, just have a free analysis done and have a consultation with me or one of the reps. Just look at it, give you tips, advice, because we do a lot of just free consultations for people that give them advice. So I'm happy to do that for anybody that wants just a free set of eyes on their credit, somebody that's done this for enough time to know, go use this card. You haven't used it in a while. Transfer this balance over here, apply for one of these type of cards, because certain cards rank higher than others. Amex ranks the highest, Discover, then your Chase, B of A, Citi, and then below that, your Capital One. So they also rank you, your card, the type of accounts you carry ranks, you're scored ranked on that differently as well.
Wow. Now that's the first time I've ever in my life heard that
Yeah.
each credit card is ranked differently.
Yeah.
Amex is at the top, and you said
Amex is on
Discover
top.
second.
You're gonna pay a little higher fee for the Amex because they charge you an annual fee. I think Discover has some that cost, but most of them are free. And then Citi, Chase, B of A, those Wells type cards are in that realm. And then below that, you've got your Capital Ones, the Chimes, they rank differently. So there's different type of benefit to your credit score with the type of accounts you're carrying.
Mm-hmm. Wow. So what are some red flags people should watch for when hiring a credit repair company?
That's a good question. Do they offer a guarantee? What type of approach do they use? How long have they been in business? Are they charging a monthly fee and trying to lock me into a never-ending contract that doesn't expire, like a gym membership, hoping you forget about it? Those type of things I tell clients to steer away from. Or if it just sounds too good to be true, if they're telling you, oh yeah, we can wipe your credit clean, or we get you 800, no problem. Things like that just are key buzzwords to stay away from, it's just, I've been doing this long enough. I've heard it all.
We can get it. Get you 800, no problem. No problem.
Yeah, I got
you
you 800. You're a 480. It's like really, okay, that kind of stuff. So stay away from whatever sounds too good to be true. Make sure they give you guarantees. Make sure they do a free analysis of your credit. They're not just telling you to sign up without even looking. A lot of these firms, believe it or not, will just sign you up without even looking at your credit, and they're out there to take your money. And so, what it feels like in your gut. If it doesn't feel right, just maybe take a step back and do a little research.
Well, I got to tell you, Steve, two things you said that really my ears perked up is number one, you've been doing this 21 years. Mm-hmm. You've got a lot of success stories. And then number two, you said you don't take on everybody.
Right.
So because you really know, hey, why take on someone that I know I can't help, that's going to jeopardize the reputation of my company?
Yeah, somebody might be a better fit for debt settlement. That might be a better route for them, or credit counseling. A lot of people get credit repair mixed up with those too. Debt settlements where you have a lot of debt, you want to settle the debt. That's not a credit repair. That's not a good fit for credit repair if you want to go that route, even though some clients don't realize you can actually remove accounts even with a balance on them, or there's a statute of limitation on how long you owe the debt, or technically how long the creditor can come after you for the debt, and they don't know that either. So a debt settlement firm is not going to tell you this kind of stuff because it might make you think twice about hiring them. But not, every state is case by case. So if you want to know what your state's law is on how long you owe the debt or how long they can come after you for the debt, look it up. Just Google statute of limitations debt and then the name of your state. California is 4 years. North Carolina, here where I'm at, is 3 years. But there's some states that are 7 to 10 years on how long they could come after you for that debt.
That's crazy.
Mm-hmm. They can't sue you after the statute. They can't garnish you. They can't sell it to another agency. The only thing they can do after the statute of limitations is receive a payment from you. So they can still take your money, but they can't actively pursue you for it if it's past the statute. That makes our job a lot easier at deleting accounts, even with a balance, if it's past the statute, because the creditor knows here's a client that's coming at them with a threat of legal action and they're past the statute. Why are we going to fight back here? If this client's this savvy, they might actually be awarded damages. So we're turning the issues around on the creditor and saying, maybe I did maybe I did fall behind, or maybe I did repo the car or whatever, but did you report that correctly and protect my rights? If not, I can sue you for that. And so we're turning the issues around on the creditor, making it an issue of, did you report it correctly? Can you prove it? Is it still within the statute? These kind of things help us get things removed.
Stacy Dentley Jones says, wow, I didn't know that. So I'm listening because these are things that I want to pass on to my clients. And like I said, when I come across clients when doing home mortgages that do have credit challenges, I'm totally referring them to your company. And you guys have been doing an amazing job. One of my teammates, John Green, actually said, hey, send your clients to American Credit Repair. They'll take good care of them. They'll get them right, and they'll be ready to go rock and roll and get into that house. And it's been working out great.
Is Garrett, I think Garrett is your rep, correct, Garrett?
Yes, it is. Garrett,
Garrett's been with me 14, 15 years. He's great. The next few you send over, let him notice. Make sure that Steve gets these. That way you and I or your lenders can jump on a call with me, and we'll actually go through that one together. And then you can actually hear, if you ever want, I'll conference you in on the call with the client so you can hear us actually go through the report with the client and how we're enrolling them, what we're recommending, what we're telling them they should do, combined with explaining our process and guarantees. We like to downplay the expectations a lot because in credit repair, so many of these companies have done such a bad job of just making a terrible name for the industry by over promising and under delivering that we do the opposite here. So you'll actually feel that on the calls we have. If you ever want to jump in on one, feel free.
Oh yeah, absolutely. Definitely want to do that. Definitely, definitely.
Or
Listen, I got
anybody you know that wants a free analysis just for a recommendation call, have it done and then have me be the one that goes over it with you, you know. Anybody that just wants advice too, that's another call to have.
tell them once again how they can get a free analysis, how they can reach you.
Your rep is Garrett Bradley. Technically, I should say go to Garrett because Garrett will be the first step, and then you'll end up being assigned to me. So Garrett's email is Garrett GARRETT 2 R's 2 T's at AmericanCredit.com. You can just shoot him an email, say I saw the podcast. You know, how do I get a free analysis? And he'll take it from there. He'll pull that soft pull report. He'll have it analyzed by our team. And then they'll assign you to me or one of the reps. But if you mention that you want to talk to Steve, they'll make sure that they get you to me, and I'll be the one that goes over the report with you. So cool. Garrett at AmericanCredit.com, 2 R's, 2 T's. And then I don't have his phone number here. Oh, I do. Here, let me get his number.
Oh, you're giving it out.
I got it. His number is, you can always call him. Garrett is 310-382-1394. So 310-382-1394. Same thing. Just mention you saw the podcast and you want that analysis done, and he'll take it from there.
Cool beans. Stacy has another question. She said, "What's your suggestion for a fraud case being added to your credit report?"
On that note, I'm assuming she means identity theft. So a fraud case, identity theft. If you've had your identity compromised, someone stole your identity and has used it, what I always recommend clients do is file a police report first, so you have that on record. You can do that with just a simple phone call. You don't have to go to the police station. Explain what happened. You know, somebody took my credit or used it or opened up accounts fraudulently. I'm assuming that's what she means. Getting the police report is crucial because that's very helpful in getting these items removed. So if somebody's a victim of fraud or identity theft, the police report is crucial to getting that stuff removed because it shows there was a real crime committed here. You know, someone actually used your identity, you know, illegally and fraudulently opened an account. Also calling the companies up that they opened this account with, because they're going to be opened in your name and now they're defaulted accounts. Explain to the creditor, hey, I've been a victim of identity theft or fraud. I have a police report. How do I get this removed? What do I need to file or submit to you, my creditor, the creditor that was opened fraudulently? How do I get this off through your process? Most of these creditors have dealt with this, and they'll help the clients, you know, help them put them on the right direction to get these things removed. Or if you don't want to deal with that, you can obviously come to us, submit the police report to us, and we take care of it for the client. So we do this a lot for clients that are identity theft victims.
Awesome. Stacy said, yes, that's exactly what she was talking about. I got 2 more questions, Steve, then I'm gonna let you get back to doing the great things that you do. If you could just give one piece of credit advice to everyone listening, whether it's on the listening live or on the replay, what would that be?
I try to, you know, there's so many. One of the tips I give a lot of clients, and this is going to date me a little bit, but if you have checks, like, you know, the old checking accounts from back in the day, I talk to clients now, they're like, what are those? Anyway, if you ever get in a bind, let's say you're in a bind and you have to decide, am I going to pay the car payment this month or the utility bill, or am I going to pay the credit cards or the car payment? And you can't do both. Like, if you ever get in a bind, this is a tip I give clients. Write a check for less than the amount that's owed for the car payment or the credit card. As long as the creditor cashes that check, they can't report you late. So if you have a $500 car payment and that's all you have available and you don't want to miss the car payment, but you're going to let credit card payments slip, write a check for $300 for the car payment, but mail it in. Don't try to do it online or they'll reject it. The bank has an option to reject your check, although nowadays everything is automated so that there's not a little old lady in the back room opening the envelopes and stamping the checks, right? This goes down a conveyor belt. It gets pulled out of there. The check goes down another conveyor belt. It gets stamped and off to the bank. As long as that check cashes, they can't report you late. So just remember that tip if you're ever in a bind. That's probably one tip. Another tip would be, you know, the credit card balances. Make sure you're under the limit. If you go over your limit, even $1, your score is going to take an additional hit, 30 to 40 points on top of the damage for being maxed.
First of all, I'm going back to I still write checks. So I'm going back to the check.
Remember that tip. Yep. So teach your clients that one, because I believe I've been using that one since college, believe it or not. I remember those. I actually learned that tip from trial and error myself because my credit was immaculate when I got out of the military, and I wanted to keep it that way. But being in my 20s, college days, I was struggling. So I remember actually writing a check for $100 for my car payment. It was $350, and just seeing, I was like, what are they? All I can do is get told they just could send it back, and they never sent it back. And all I did was next month I had an extra $250 added to my payment that was due, and I think a $15 fee for not paying the full amount. But I had no late payment on my credit. So I
Oh my
learned that
God.
tip through trial and error through my college days, and I've
Oh
been
my
telling
God.
people about that ever since.
That's crazy. And it's still
Mhm.
working.
Still works today.
And how
Even
many
better today. Yeah. Even
oh
better
my,
today, because someone back then was putting eyes on that check, and they could have actually rejected it, and they didn't. But the bank has the right to reject the check. So I have to tell clients that it's not a magic wand, but if you're ever in a bind, better than not paying one of the two bills and letting it for sure show up. At least you're taking a swing at it, And I've yet to have a client come back to me and say, I tried that trick, it didn't work. And I've been telling that for 21 years. I've been telling people that trick.
wow. Thank you for sharing that
Mhm.
tip.
Yeah.
That is crazy. Last thing, what's so special about American Credit Repair? And talk to us about your money back guarantee.
Oh, yeah. I think what sets us apart is, well, three things. The fact that we've been in business for 21 years, which, in this industry, we're basically dinosaurs. And then the guarantees we offer are three of them. We give the clients three guarantees protecting them. The first one is we guarantee that any item we delete is not just going to pop back up. Whenever you use a dispute letter approach, because it's that one-sided approach I mentioned, where you're not threatening the creditor with a lawsuit, the reason those items will pop back up from a dispute letter approach is because of that 45-day time period I mentioned. Let's say you write a letter and say, I don't think I missed my car payment, and the creditor doesn't respond. The bureaus have to delete that at 45 days because they didn't get a response. So you think, oh, wow, it worked, it's off. Then all of a sudden, 60, 90 days later, that late payment's back on your credit. Why that happens is because the creditor maybe didn't respond at 45 days, but 60, 90 days later, they finally respond to the bureaus. The bureaus verify that the proof is there, that the item really belongs to you, and they'll put that late payment back on there. So it came off temporarily and then comes back.
Mm.
With our approach, because we're so aggressive at threatening them, we guarantee these items are permanently deleted. And so far, for the 19 years we've been using this approach, knock on wood, we haven't had an item come back where somebody said, hey, it's back. If it ever came back, any item we delete, we'll go after it for free. So 2-3 years from now, if something we remove pops back up randomly, we'll go after it for free. We also guarantee all the client's money back if we don't delete anything. So if a client starts out with, it's more for the client with one or two items, because usually we get about half, maybe 60% of the stuff we go after off. But if a client has one or two things on their credit, that's all that they have, and we can't remove them. Let's say after 4 rounds of investigations, those are still there. We'll give them 2 more rounds of investigation. So we'll take 2 more swings at it. If that doesn't work, we give the client all their money back. So it's 100% money back guarantee if we don't delete anything. And then if we do delete something, but it's not enough for the client to be happy, maybe we get 1 thing out of 10 removed and that's all we get, we only keep $150 for each item we delete. And then we give the client a small processing fee and they get the rest back. So the clients with only a small, number of results or a small result, we'll give them a big portion of their money back. And then fee wise, I don't think I mentioned that. Our fees vary depending on how much work's involved, but usually somewhere between 11 to 1500 for 8 months of work. We break that up into payments. Usually payments are broken up into 8 payments because our program is 8 months long. So we don't charge the clients for never ending contracts, like I mentioned. I would say around 150-ish a month is what a ballpark payment would be. And then, like I said, we guarantee the results. So at the end of the program, if we fell short, we're happy to give the clients more work or a refund or both.
Wow.
Mhm.
You said something I have never heard any credit repair person say, is that they guarantee
Mhm.
that the negative items will not return. I've
Yep.
never heard
Mhm.
anyone from Credit Improvement say that.
Yeah, we
So,
we started offering that guarantee as the years went by, and we started to realize these accounts weren't coming back. So that's a guarantee we've had for about 7, 8 years now. The 100% money back one, same thing. We started offering that because there's that client that has 1 item or 2 items, and they're reluctant to enroll because they're afraid, what if you don't get it off? I might end up, not getting my money back or not getting very much of it back, because of the other refund policy. What if we delete a bunch of inquiries? So we made it so that the clients have that peace of mind. So we have a lot of clients that have 1 account now that they'll enroll, knowing that we have to delete it or else we have to give them all their money back. So it gives us a vested interest too to get it off. If we don't get it off, we have to give them their money back. So we have a lot more pressure there as well as the client to get it removed because they want that off. So do we.
Yeah, exactly.
And we refund people. I would say probably 5 clients a month get a refund. We enroll roughly 200 a month. We're not a very big firm. We're not like Lexington Law or one of the bigger ones trying to enroll everybody. We have a niche here. So we work mainly with lenders and realtors or clients of theirs, or
Okay.
referrals from clients. A lot of referrals come in.
Wow. Tima Walker wants to make sure that Garrett's email is Garrett with 2 T's, GARRETT Bradley at AmericanCredit.com.
Just Garrett. So Garrett at AmericanCredit.com. So just Garrett, 2 R's, 2 T's, and then drop the Bradley off that. And thank you for checking, Tima. Nice to meet you.
Garrett at AmericanCredit.com.
Yep, Garrett
awesome
at
sauce.
AmericanCredit.com.
So listen, guys, I'm about to let Steve go. So if you've got a question, you better drop it right now. And I understand that a lot of people don't want to ask questions because credit is something that's personal. So they may be reaching out to Garrett or reaching out to you later after the podcast. But if you have a question while he's on, go ahead and ask. I thank you for covering the fee. I think $1,100 to $1,500 is not a lot of money. Right. And especially you're offering guarantees.
Yeah, we have veteran discounts, first responder promos. So anybody that's in law enforcement, firefighter, veteran, active duty military, nurse, doctor, we have what's called a first responder promo, which saves 20%, which is $300 savings for those folks. No matter how much damage they have on their credit, they're always going to get that rate.
Nice. Thank you for that. Thank you. Shantae Marshall, I'm assuming she's a realtor. Thank you for being on the coffee chat podcast. She said, sorry if you mentioned this already, but do you partner with realtors?
We do. Absolutely. Anybody that has clients that they feel would be a good fit for us, we're happy to work with them. We have CPAs, realtors, lenders, obviously. We have automobile finance managers using us. So there's a range of different clients that come to us from out there. And a realtor is a great referral for us because you usually have 2 or 3 lenders you prefer to work with. So a good referral from a realtor would be, who are your lenders that you're using? Because that's who mainly your clients are going to go to anyway for the financing. So if you're connecting us with your lender will make sure those clients get to us. And then anybody else they may be working on that came from someone else, we'll be able to help that lender too. So a good referral from a realtor would be who your lenders are that you're using in your pipeline to help your clients. So those would be a good referral for us. Absolutely. But obviously, if you ever have any clients, we're happy to help them. And the analysis is always free. And we only enroll the ones we feel we can help, or the ones that have a good shot at getting the loan, unless they're just adamant about it. We've had some clients that are like, I know I'm going to be 2 years in your program. Just let's start now. I'm not expecting much, 60 negative items and only 3 positive accounts. We got work to do. So there's clients that know that their goal of getting a home is down the road, but they still want to take this first step.
Well, because it's a great investment. You're investing in yourself. So absolutely. And then not only that, now I think one of the biggest things that we're missing too is not only is your company improving the credit, but you are giving them knowledge to maintain the good credit. You're not just exactly, because there are so many individuals and companies that just try to remove everything, but they never give you the knowledge to maintain the good credit. So
I'm going to send you, if you want to, I'll send you an email of some of my recommendations that are just lifelong tips that clients take with them. So I'll send you that. So you have, something you can share with your clients, something you can talk to them about, like opting out. If you're not talking to your clients about opting out, that's a great tip. And then the tips on credit card usage, I have about 5 or 6. And as long as, clients follow those 5 or 6 tips, you're going to see your scores jump on your own from just your own usage. And a lot of clients may not need us for help with their credit, but they'll appreciate all those tips. And, it'd save them having to come in and have us do an analysis just to get access to those tips. I'm happy to share that with you.
I would love that. I would love that. Yeah. Listen, everyone, I just want to encourage you right now at this part of the podcast to grab this free book. If you need to know how to get the best mortgage for your home purchase, you can go online to loanswithsuham.com and download it immediately. Not immediately, but immediately. So I wanted to plug that real quick. So let's go back. If you got any questions, you need to drop them now within the next 30 seconds because we are going to end this coffee chat. While it has been a great informative coffee chat, yes. So we are encouraging everyone to take a moment right now and share this bad boy, like this thing, and let's get this into the hands of people. Steve, I want to thank you so much. I don't see any more questions coming in.
Thank you, I appreciate you.
Oh no, I really appreciate you. Once again, like I tell people, I do these coffee chats. Yes, it's for everyone else, but it's also for me as well. And you shared so many things. You gave away so many tips that
Hmm.
people can implement. And if they don't want to implement, how they can come to you and how,
Yeah, we can do it for them. Yep, happy to.
yeah, absolutely.
Yeah.
Teresa G. Smith says, very informative. Thanks for sharing. I just want to say this. There are a lot of people that do credit and whatnot.
Hmm.
And again, I've hired people like years ago in the past and nothing became of it. They just
Hmm.
took money from me and I didn't see anything happen.
Yeah.
And so when I see someone who's really doing something and really removing things, and you're giving me a guarantee that if
Hmm.
we remove stuff, it's never coming back.
Right.
You're given a guarantee that if we don't fix it, we'll give you your money
All your
back.
money back. Yeah.
And then not only that, while we're on this journey together to credit improvement, you are schooling me, giving me the knowledge
Hmm.
to maintain it.
Yeah.
So
Yeah, we care about the clients, longevity. We want them to come back to you, obviously, to get the purchase, and qualify, but we want them to have the tools that they know moving forward how to keep it that way so their credit doesn't just end up back where they started with us. And we're always happy to re-enroll clients that go through the program. They do quite a few, clients will re-enroll because they got great results, but they want to keep it going. So
mhm.
that's another thing we do.
Awesome.
Yeah.
Well, listen,
Thank you, Sue.
any lasting words you want to leave?
No, that's it. I really appreciate you having me here and doing this. So anytime in the future, if you ever want to do another one of these, feel free, just let me know and I'll be happy to jump on another one with you. Or if you ever have any questions that come up as a result of this podcast that maybe they didn't think of today, feel free to, send me an email and I'll jump on a call with them or you and
Yes.
we'll happily, get the question answered for them.
Awesome sauce.
Yeah.
So
And I'll send you
listen,
those links I mentioned for the secured
please.
card, the link to the credit report, and then or the credit, the soft credit pull. I'll send you that link too, so you can share it with your clients.
Thank you. Thank you. And then those tips that you said
Yes,
you would
the credit
share
card
that I
tip.
can share with my clients.
I will.
Yes. Thank
You
you.
bet.
Thank you. Steve, I thank you so much, guys. You have been watching Coffee Chat here with my guest today, Steve White, founder of American Credit Repair. I suggest you go back and watch the replay if you haven't seen it. If you got on here live, go back and start from the beginning. It is one you don't want to miss. Catch us on Thursdays, 7:30 a.m. live. We are live here on Facebook, YouTube, and LinkedIn. I am Salandia Hammond, loanswithsuham.com, NMLS 251099087. We'll see you guys on the next Coffee Chat. Thanks, Steve. I appreciate you
You're welcome. See you.
tremendously. All
Thank
right.
you, Sue.
Bye-bye.